Welcome back to Practice Academy. We have time for one more session today. It is titled Taking Control of Your Financial Future, a Physician's Playbook for Financial Wellness, sponsored by Forum Financial. Just one last reminder, we will have some time after the presentation to answer audience questions. If you have a question about the topic, click the Ask a Question button, type in your question, and click Submit. So let me introduce you to the speakers for our final session. We have Mihan Hoskin and John Clendenning, CEO of Forum Financial. Let me give you a little bit about them. As Managing Director and Senior Wealth Advisor, Mihan understands her clients' unique goals and executes a detailed action plan to put her clients on the right path. Being insurance licensed in life, health, annuities, property, and casualty, Mihan's conversations with clients are truly comprehensive. Prior to joining Forum Financial, Mihan worked at Charles Schwab, where she was responsible for nearly $1 billion in client assets. She has been quoted in Investors Business Daily, Kiplinger's, MarketWatch, and Money Magazine. In 2001, Mihan helped launch Schwab Private Client. John Clendenning brings 2 decades of leadership experience in innovative financial services and fintech companies. He most recently served as CEO of Blucora, now Avantax, a publicly traded fintech and wealth tech firm focused on tax-smart wealth management. He and his team drove total stock returns in the top 3% of the Russell 2000. Previously, he served at Schwab for 11 years, where he was CEO of Schwab Bank and co-head of the Signature Retail Division. He also served on the board of Betterment Holdings. Take it away, Mihan and John.
Hey, thank you so much. Glad to be here with everybody. Welcome. Just to add a bit to the introduction, John here, key thing to share is when I founded the company, big picture, I felt super strongly that physicians, the heroes of our society, deserve a ton better than they're getting from existing providers. And I also felt like the only way to really up-level the experience around financial services, personal finance, personal economics, was to start from scratch by building an entirely new company. So I've done that. My very first hire was Mihan Hoskin, who, as you know, is joining us here. And Mihan, why don't you share a little bit from your perspective, too, on why you joined Forum Financial?
Yes, thank you, John. I'm so excited about this opportunity, too. I've reached my 30th anniversary in the investment industry, just happened this month. And just to give you a little background, I actually began as a pre-med in college. And after my first year of college, thought, I should probably learn more about investing. Having been a refugee from the Vietnam War, we didn't grow up with a lot of money available to invest. And so I didn't have that education. So I had an opportunity to have a 10-week internship that summer at a brokerage firm, Charles Schwab. And at the end of the 10 weeks, they asked if I wanted to keep working there, which I thought was fantastic. So here I had an opportunity to parallel path 2 different careers, both with the goal of helping people and really trying to understand what was going to resonate with me. So got my license when I was 19, started working with clients and still going to school full time. And by the time I graduated, I had 3 years of experience working with clients, kind of like the financial residency. So I kept going with that, got my certified financial planning designation. And now I feel like 30 years later, it's really awesome to feel like I came full circle because now I'm surrounded by physicians. They're my clients. I'm just not one of them.
Thanks, Mihan. Let's go ahead and get rolling here. So big picture again, founded the company to transform outcomes for physicians. And we're going to do that and do it today through a totally new approach to wealth and wealth acceleration, one that allows you to take control of your financial future. 3 key points about the company. First, we're exclusively built to serve physicians so we can fine tune to your needs around financial services. Second, we offer a truly comprehensive personal finance solution. Our idea here is to have every single tool that's needed in the toolkit to do the following, and that's to accelerate wealth for you as a physician and for your family. What you're going to learn today in this short webinar is the following. First, why it is that physicians dramatically underperform their financial potential. Second, what are some important strategies for physicians to optimize their financial life? In other words, that playbook to optimize going forward. Third, what these strategies can be worth for you. You'll be surprised at how much future wealth you can still create regardless of your stage or your specialty. Then lastly, how Forum uses those strategies to add value to you as a client. So why is it that physicians underperform? And I'll mention the magnitude of that underperformance in a minute. But two things. First, really structural. Physicians clearly don't have the time to navigate what's a pretty complex and increasingly complex financial situation. Tons of decisions around how to optimize that financial life, especially as all the change that's happening around the career side. We hear from physicians all the time that they're super busy. On average, the physician works about 50% more than the typical American at 60 to 70 hours a week. On top of that, we hear this from all of our clients. They receive really no training, right? So there's no focus on educating around finance matters in med school or in residency. And on top of that, the dynamism that's happening in ways of working today is phenomenal, with 40% of physicians having changed jobs during the pandemic, with over 70% of physicians now employed as opposed to exclusively being a sole practitioner or part of a group. A lot of change just in the last couple of years, and that dynamism is increasing. Again, creating lots and lots of questions around how does one as a physician optimize the financial life. On top of that, our strong view is that the financial services industry today fails physicians on 4 key counts. First, silos. Sort of tax does not meet investing, does not meet the insurance optimization that needs to happen. Really a series of disconnected or point solution providers that leads to missed opportunities and a really big unnecessary tax bill. Second, so many providers, even today, have an incentive, compensation plan or a personal incentive to push a product that happens to make them more money, or to just sort of sit on the sidelines doing nothing, collecting their fees from you all. Third, horrible planning. Typically, planning consists of what's necessary for that product provider to sell that product. It's not longitudinal in nature, i.e., looking over a horizon of a career, and also is not integrated across all aspects of the financial life. And on top of that, one of the more important elements, investing, horribly dated approaches, really backward-looking approaches to investment management. A common theme as well across providers is that they tend to obscure performance. So you really don't know how you're doing. You may see a dollar figure here or there, but you actually have no idea how you're doing relative to your long-term goals or your short-term goals for that matter. And as a byproduct of that, they're allowed to take no accountability for your outcomes as a client. What does it all mean? So it adds up to a pretty unusual situation and unfortunate situation, no doubt, at an individual level, and also, I think, for our society. And that's the idea that physicians, as noted before, dramatically underperform. We feel like by about half their financial potential. It's shocking that 1 in 4 physicians last couple of years who retired or reached 65 had $1 million or less in total net worth. That's 2 people earning over a lifetime of service to the rest of us. In the middle column, the average physician has a net worth of $3.4 million at retirement. We feel like that number should at least be 7. And we all know from personal experiences, certainly from our standpoint, the physician clients that we know about and our friends as well, that burnout levels are super high. And it's unfortunate and fixable that stress over financial matters is the number 2 driver of stress among physicians. We're here to do what we can do to change all these bad metrics and turn those around. Our commitment is to work at the highest levels of accountability with our clients. Mihan's going to take the mic at this point and share some of the strategies that we deploy to deliver superior results. Mihan?
Thanks, John. Well, the first step is to take control of your financial future. That's to modernize your approach to investing to reduce the tax drag on your investments. The biggest pain point I've heard over the years is paying too much in taxes, so you'll hear ideas to address that. The first idea is custom indexing. Custom indexing allows you to own the individual securities typically bundled in a mutual fund or ETF. So think about this mutual fund and ETF as being locked. You've got these stocks, they're in a basket, but you really can't do anything specific with them. With a custom index, you unlock the potential to being able to have more tax efficiency by owning the individual stocks. And so another way to look at this is lining them up, right? There's different options. There's mutual funds, ETFs, and custom indexing. With mutual funds, you get professional management. However, it comes at a cost. If you have a mutual fund, a lot of times you might see phantom capital gains. These are capital gain distributions that happen at the end of the year that can cause a tax consequence for you, even if you didn't make money in that fund that year. Investments have gotten better by introducing ETFs. So ETFs on top of professionally managed have low fees and transparency. But where that stops, custom indexing picks up. So we got investment customization, ESG, SRI, and faith-based restrictions, tax loss harvesting, which is a huge plus, and then tax transitioning. So we wouldn't expect you to execute this on your own. You're too busy. You need technology. So custom indexing coupled with technology allows you to systematically capture and benefit from losses, tax losses in individual stocks, even when the index is up. So I'll give you an example. In 2021, the S&P was up 26.9%. However, within the S&P, WIN was down 23%, Global Payment was down 36.9%, and Activision was down 28%. There were actually 70 stocks in the negative in the S&P 500 in a year that it was up 26.9. In an ETF or mutual fund, you don't get to take advantage of that. You're just locked in that box. But in a custom index with tax loss harvesting, you're able to bank losses. Another example, and this is a true example, a client who came with cash October 25th with 500,000 up to now 552,000 to June 27th has banked 41,000 loss, but made 52,000. So we'll tell you why that's important. This creates a bank of losses that can be tapped into until they are fully utilized. Now, you are not limited to the $3,000 income deduction. So I'll give you an example. Let's say you had $100,000 of carry forward losses, and this year you decide to take a gain and sell something for $50,000 gain. Because you have those carry forward losses, you can match that loss with that gain and not pay any tax on that $50,000, and then also reduce your income by $3,000. So now you carry forward $47,000 of loss to the next year. So to put this in numbers, let's say you had $1 million of investable assets, and you use this tax smart investing portfolio strategy. This can incrementally earn you over $3 million over 30 years. You can see this depicted in the chart to the right. The light blue is with tax management and the dark blue is without tax management. So you can see the huge impact over the years of 10, 20, and 30 years. The second way to take control of your financial future is to invest like large endowments do. They don't forget the opportunities in the private sector. So you'll benefit from well-diversified institutional grade private investments via private equity, private real estate, and private debt. And remember, you need to be accredited or a qualified purchaser in some of these cases to invest in private investments. But here's what's interesting. Take a look to the right to the chart. What you see are the largest 185,000 companies in the United States. That dark blue sliver represents the public market. That's the market that you're accustomed to hearing about on the news and being able to place a trade, for example, in an index. So you can see there's a wide, vast array of investment choices available in the private market. Why is it important? Because on average, private equity returns have exceeded public equities by 4.3% per year. So over to the right, imagine that what you're seeing is the excess private equity returns over the public market returns of 1 million invested. That's over 10, 20, and 30 years, a really huge impact by just having access to private investments. The next step is utilize tax smart strategies extended across your entire financial life to reduce tax liability. So many times people think about just the investments, and there's so much more. I'm going to go over a few examples. There's a lot going on here, but so many ways, as you can tell, to reduce your taxes. The first is employer-sponsored retirement plans. Maximize your retirement savings with tax benefits. This reduces your taxable income. So if you're in a high tax bracket, you want to take advantage of this. And if you get a match, that's even better. For your solo 401k or 1099 income, this reduces income taxes, maybe from locums or other 1099 work. If you're not going to spend it, then defer it, right? And take advantage of that. That reduces your taxable income as well. Itemize your deductions. So this is really interesting, and it requires you to take a look at your tax return. We do this for our clients. But notice, if you contribute to a charity consistently every year, and then look and see if you're taking the standard deduction. If you're taking the standard deduction, you are not benefiting from a tax perspective of contributing to that charity. So contemplate or consider bunching your contributions in 1 year. So maybe you do 3 years worth of your charitable contribution, but you put it into a donor advised fund so that you can get a tax benefit. For example, let's say you give $10,000 a year, but you look at your tax return and you're still doing the standard deduction. Go ahead and do $30,000 for that year, and then you get the $10,000 for your state and local income tax. That puts you to 40. So you're way above the standard deduction. So think about that. There's also 1035 exchange. There's 1031 real estate exchange. And don't forget about opportunity zones. That can be a benefit. There's the backdoor Roth, the Roth conversion, and things to think about in terms of putting the assets into the IRA so that you can convert them to the Roth. And that way, for high earners, you can access the Roth. Consider tax-efficient portfolio withdrawals, tax-smart asset allocation, and estate planning. So if you think you don't have an estate plan, you actually do. It's the one that your state came up with. So it's important to review what your assets are, whether you're in a taxable estate. Right now, the exemption is $12.92 million, but it will sunset after December 2025 to about 6.8. Finally, make financially aware career decisions as job mobility for physicians reaches an all-time high. So career transitions, we think of that as a life event. And that's also, think about life events as like getting married, getting divorced, having children, someone passing away. Career transition is a big deal. Career transitions and new income streams should lead to a reset across your financial life. And some examples of career transitions are full career change, buying into or selling a practice, full or partial retirement, concierge or telehealth, consulting income, or rental income. Consider that you might have to look at these different areas: contract negotiation, compensation review, life, disability, umbrella coverage, tax planning strategies, annual investing contributions, private investments, and trust and estate plan will. Okay. And sorry, there was a little bit of technical difficulty there. Maximize your wealth and financial wellness. So this is what we do for our clients. And you can see an example of the app that we have. It's a proprietary app, helps keep everything in one place so you know how you're doing and be organized with all your documents. There are opportunities at every career stage to further maximize wealth, from residency all the way through to the end of retirement. There are a lot of major financial decisions that you're faced with as a physician, possibly pretty heavy loans, and how quickly do you pay them off? Do you do PSLF? How much do you save versus paying off loans? A lot of really big decisions that, if they're made efficiently and correctly, can have a massive impact, like John was saying. And that's what we help our clients do. We've also seen 132% increase in retirement net worth versus prior trajectory. And we've seen immediate tax benefits for our clients. On average, in 2022, we saved clients about $77,000 in taxes. So we've talked about a lot of things. And here's an opportunity to take everything you just learned and apply it to a case study. So let's talk about this case study. Dr. Hudson, age 50, her income is $450,000 between W-2 income of $300,000 and 1099 income of $150,000. Her spouse does not work. She plans to retire in 15 years. Currently contributes $20,000 into her employer's 401k plan, currently valued at $1 million. Has a $2 million joint investment account invested in mutual funds and ETFs, and has a contract renewal coming up with her employer. So looking at this information, what are some observations? What are some thoughts? So one of the first things is, we heard in that prior slide that she also has a 1099 job. So that would trigger the thought of establishing a solo 401k from that income, from her side gig. She can do up to 25% of that income, so that's $37,500. Max out her employer 401k. So you notice she's putting $20,000 there, but she's age 50, so she can actually do $30,000. So that's another $10,000 right there. And if she has a high deductible health plan and she's married, so she can do the family plan, she can do $7,750 into the HSA. That adds up to over $55,000 of income reduction that she doesn't have to pay tax on. The next thing is, you notice she had a $2 million investment account in mutual funds and ETFs. And if you recall in the previous slide, when we lined up mutual funds, ETFs, and custom indexing, if we were to implement custom indexing along with asset location and enhanced returns, we could see the tax alpha from the tax loss harvesting and asset location and enhanced returns at another $73,000. And if you remember, we talked about the private investments, right? She's an accredited investor. And so if we carve off 20% of her total investable assets and invest in institutional grade private investments, that adds another $36,000 available of growth. And she was in the process or approaching a contract negotiation. This is something that we help our clients with as well. And so here's an example of negotiating a $25,000 salary increase as part of a 3-year renewal, which we would use $14,000 net of taxes. And then finally, we also do insurance reviews. So what we would take a look at is to see what type of insurance does she have? Is it whole life? Is it term? What are the terms of the whole life? Here we're able to save in insurance premiums of $10,000. So when you take this all together with everything I just went over with you in the case study, collectively, these strategies add nearly $6 million of net worth over 15 years, leading up to Dr. Hudson's retirement. It's really quite amazing. So you can see a graph to the right that without form, that's the orange line, you see the current trajectory. But with the private investments, tax loss harvesting, really thinking outside the box in terms of expanded retirement accounts through the solo 401k, really optimizing the situation, you can see the impact with form, the green line. Back over to you, John.
Thank you, Mihan. Hope those illustrations were helpful. Just a couple things in summary here before we go to some questions. So how do we maximize wealth? Mihan illustrated the impact of a comprehensive and a modern approach to looking at every aspect of your financial life. To summarize, though, a couple things here. First, we focus big time on your career change, how that drives decisioning you need to make about this job versus that job, for example. What are the financial implications of that, as well as reconfiguring your financial life based on changing jobs, which is a necessary. Next, we make sure you work directly with a certified financial planner like Mihan, so that you've got a go-to that's accountable for the entire experience in working with Form Financial. Third, we are combining experts like Mihan with modern technology. And so in our model, we're available whenever you want us to be. First of all, because our folks work untraditional hours. But on top of that, we have an awesome app. The illustration you saw from Mihan is a good illustration of that. Gets great usage because it's really useful. So you can get work done, get stuff done, advance your financial situation simply by using the app. And lastly, as we've exemplified here, we connect the dots across all those wealth drivers. And here they're listed. So the important thing to take away is that you need to optimize within each of these, let's call them domains, investing, let's say, or that example that Mihan gave around estate planning, knowing that level of tax deductibility is going to change. But these are also interconnected. And so the decisioning has to really work across all these in a cohesive fashion. You work with us in a Zoom sort of world like we're all in today. And so we set up virtual meetings over Zoom with Mihan and her colleagues. But also, again, you can get stuff done, advance your financial position simply through working with us via the app or via text. And lastly, our compliance person wanted to make sure we had the chance to just give you a chance to absorb this, given that we're a regulated company, as you'd expect that we are. And so if you wanted to take a glance through that, you'd be welcome to do so. And we'll close before we get to questions with an obvious one, which is, well, if I wanted to learn more, what do I do? Easiest way to do that is to just snap an image of that QR code there, or take down Jesse Pincus's information, jesse@formfinancial.com, mobile 415-660-0805. She's super comfortable to work with, and she'd be very happy to have a conversation with you. With that, I think we're ready to go to questions.
Yeah, thanks so much, Mihan and John, for the great presentation. Let's see what we've got in terms of questions. So here's one. So my advisor says they do tax loss harvesting. So what's new here? So I guess what they're asking is what makes Forum Financial stand out? What makes you guys different?
Yeah, I'll take that one, John. So the advisors that say that they do tax loss harvesting, what I've seen in the past is that means in the fourth quarter of the year, they take a look at what you have and see what's a loss and go ahead and sell it. That's not proactive tax loss harvesting. True tax loss harvesting leverages the power of technology to look at those opportunities throughout the year, because those opportunities can be rare and quick. So there's a huge difference between that kind of antiquated way and ours.
Can you just so the audience, just to make sure we're talking the same language, what do you mean by tax loss harvesting? What exactly is that?
Sure. It's selling an investment at a loss. And so when you have an investment that has a loss, you're able to offset that with future gains. So it's about being tax efficient.
Perfect. Thanks so much. Another question we have is, I thought you could only net 3,000 of losses against taxes in a given year. So what are your thoughts there?
Right. That's a common misconception. I even have a series out there on LinkedIn called Mythbusters, and feel free to follow me on LinkedIn. But that's one of the very things that I address, which is so many people think you can only use 3,000. But if they have a realized gain that year, let's say they sold a building, sold a stock, whatever it was that had a gain, they can actually offset that gain with any carry forward loss that they have, so that they might not even have to pay taxes that year. So okay. that kind of that couples with the question you had about why is tax loss harvesting? What is it and why is it important? Because now you just reduced your taxes that year on taking that gain.
And just to underscore that just for a moment, is that concept Mihan mentioned on having a bank of losses, right? Because the markets and individual equities move up and down all the time. And so it's natural that even if the markets are up, you can capture losses in individual positions. the cool thing is those losses don't go away. You can bank them and then apply them against gains in future years. And so if you sell a medical office building, sell your practice, whatever it might be, you've got a ready buffer, if you will, that doesn't mean you're going to have to cut a check to the government when you get a capital gain elsewhere. So it doesn't matter what part of your financial life, you just created this bank of losses you can deploy forever. It's super cool and almost never deployed by advisors today.
Okay, thanks for that. Here's a question from an audience member. I'm an older physician with right now a minimal amount of savings or retirement 401k. What strategies can I use to gain and increase my portfolio in the next, say, 5 years?
So you're not alone, like we showed you in some of the statistics. We are still able to have a huge impact. And I'll actually use a real life example, obviously with no names, but a physician who's 60, who wanted to retire by 67, but at the current trajectory, when I ran the financial plan, would have run out of money at age 77. With the savings habits that I put together, along with the custom indexing strategy and backdoor Roth strategy, the new trajectory had him retiring, at the end of his life, having 6 million left to be able to give to his family. So it's not too late to do the planning, but you've got to start now, at whatever age you are, to make sure you're on track, because you need your money to work for you. And I mean, one of the things we're really passionate about is we know physicians put themselves last. They're taking care of all their patients all the time, and they probably don't go to the doctor as much as they should, and they're not looking at their finances. So if we can help on the financial side, we feel like we're making a difference.
Okay, great. There was another term that I just wanted to tease out a little bit. I saw in your presentation and you just mentioned, and that was the backdoor Roth IRA. That's something we actually at Medical Economics get a lot of questions about. So I'm wondering if you could maybe explain a little bit more about what that is.
Yeah, I would love to. And I kind of went through that slide quickly because that was during that technical difficulty thing that I thought I had to go faster. So I would love to talk about that. So that's also on my Mythbuster. But the backdoor Roth. So if you are a high income earner, you can't put money directly into a Roth. There are restrictions on your income that prevent you from doing that. But there aren't restrictions on your income for converting to a Roth. So think about it as a stepping stone. You put the money into the IRA first. You don't take a tax deduction because you make too much money, but then you go ahead and convert it. So you're not paying tax on the conversion. So you're basically putting the money into the Roth, just kind of doing a side pit stop to the IRA first.
And this is obviously one of the tools that Forum Financial is using, depending on the client and what's appropriate.
Yeah, as long as they have earned income. The caveat to that is you can't have an existing IRA that has money in it, right? Because there's a pro rata rule. So if there is, we also help with strategies on reducing that, maybe through Roth conversion, if it makes sense. But it's a great tool. And if you're married, your spouse can get one too.
Okay, great. You mentioned this, the Mythbusters, and I'm just curious. I don't want to put you on the spot, but I'm curious if there's any other big myths that you hear about a lot that I think our physician audience, maybe would want to hear busted. Do you have any others?
Okay, I'll put a teaser out there. So this will be coming out soon, but the myth of moving to a state with lower income tax or no state income tax, you'll actually save money. And I'll tell you how that may not be true.
Well, that is a great tease. I think that's a common conception. That's a good one. Is there anything either Mihan or John that you would like to share with the audience before we wrap up? We're getting close to the end of the program. Is there any last words or parting advice you have for the physicians out there?
Hey, one thing. Yeah. Sorry, I'll go first and let you close it out. One of the things that I think it's really important is that the physician understand where they're at financially today and what is that trajectory. It's one of the first things that we do is say, look, given your current situation, decisions that have been made by other advisors leading up to this point, here's how the financial life is going to evolve over the next several years. It goes back to the question that we got earlier. what's my baseline? Like, where am I today? It's really important to know that. It's amazing how few of our new clients, almost none, come in with an existing up-to-date plan. And so if I were to say anything, it's like, just like you might advise a patient, hey, get a checkup. I think it'd be super important for you all on this call to also get a checkup, if you will, around your financial life. And for us, what that means is not just your today health, but it's like, where is that going to take you over time? Mihan, what would you add?
It was just two things that I had to skim through on a different screen, but I wanted to make sure, because it's so powerful. The aspect of asset location, certain investments are better in certain types of accounts. So for example, if you are in a high income bracket and you have a brokerage account and you have a bunch of dividends coming in, you're paying taxes on that and increasing your AGI and possibly making yourself pay 20% on that instead of 15. So really make sure that the income producing investments are in the retirement account so that you don't add to your taxes. And the other thing is that 1035 exchange, it's so important. So many people have annuities and don't know what they cost and what they are. And I just did a recent annuity review and added up all the costs, and they're paying 3%. I mean, that's a huge amount. And that's money that they could be keeping in their pocket instead of paying in fees. So it's so important to take a look at that. And again, we are comprehensive and do that for our clients.
Great. I want to thank John and Mihan and Forum Financial for the great presentation today. That's all the time we have for this slot. Thank you both so much.
Thank you.
Take care.
And that's all the time we have for this entire program. We would like to thank you, the audience, and our Platinum sponsors for joining us, Medical Economics, today for this Practice Academy. I hope you learned some great lessons that will be helpful, ideas that you can apply to your practice or your personal finance right away. Thanks again to our sponsors, Curie, DLP, Forum Financial, League Med, and Optimize. Have a great night and a wonderful evening. Thanks so much.